Hi, I'm Alex Berkowitz coming to you on November 6, 2010, and welcome back to this series of technical analysis videos. And finally, the day arrived. You are watching the daily chart of the E-mini S&P 500. This gray line you see right here was the double top that we timidly broke out from on Friday. And those of you who've been reading my notes published in Facebook know that even if we've been riding on this bull channel for a long while, we all knew that it was based on low volume, and therefore everyone was suspicious that this could be a fake rally. We finally reached this benchmark that is a 1217 level coming from April 26th highs, and we timidly broke out of this line on Friday 5th. Some people are still thinking that we could still bounce off down from here. We certainly could, even though I don't think that's going to happen. However, I would certainly feel much more comfortable if I could witness 3 or 4 more green bars above this point of reference, which was the double top at the 1217, 1218 area. This bull channel we've been riding for a long while is showing that the price is at resistance level. This means that we could definitely still have a correction taking place to meet the support line of this channel. Every indicator you will take a look at shows overbought condition. This rally that began on September 1st has been an endless rally so far. We just had some tiny corrections on the way, but nothing really important to consider. That's why a lot of people are thinking this might be a bull trap. And to my knowledge, that is the reason why today we did not break out of this 1217 line dramatically. We just timidly pierced our way through. Just getting a correction starting Monday would bring us back down below this gray level, below this double top. And that is why I would expect to get 3, 4, 5 more green bars far above this 1217 line in order to consider safe enough to get our next support level at this same double top level, turning from resistance to support thereafter. The uptrend was confirmed, of course, right around middle of September when we took out the last high. But we all know that nothing goes on forever in the same direction. Nothing goes down, nothing goes up forever. And that is what seems to be happening now. We're going up endlessly. That does not mean I'm expecting a bear market. That does mean I'm expecting a correction. So in order to keep this market on the safe side, I would expect a little more rally before we get a correction, and we can make support at the former resistance of 1217. Let's go to the Euro chart now. Okay, this is the Euro chart. It's a weekly Euro US dollar spot, and we have discussed this before in a previous video, and it's been posted on Facebook also. We have discussed that we have a strong trend line coming from the highs back in July 2008. When the euro was trading at 160 against the US dollar. We had a huge sell-off, then we had a recovery, and we hit into this point where we could then draw this downtrend line, showing a slight slanted way to the downside. And the weekly and let's say 2 or 3 year range, we can see here a high, a low, a lower high, and a lower low. Considering this time frame, the euro is still in a downtrend. Not an aggressive downtrend, but a downtrend still. The fact that we're rallying here, if we just narrow the time frame and we go to a 2 or 3 months drawn in this chart, Of course, that will be a rally or a bull market, if you will, but I want to get the big picture. Ever since the euro traded at the all-time highs, that was 160 back in July, August 2008, when the big financial crisis in the US took place. So the first technical barrier that we have already discussed in a previous video of this series, and also a couple of times discussed in my posts on Facebook, show that we are next to hit an important resistance area that will be, depending on the time when we hit that point, will be around the 145 level. And let's see, we start a correction right next week, and we just go down a little bit. It'll take a little longer to get to that resistance level, so it will make it probably a little below 145 before getting to that resistance point. When we get to that point, we could just break down and break out of this apex the same way we did back in October 2009 and keep resuming this downtrend. Now, if we take out that level, the next level to test will be the 150, 151, which was the last high of this downtrend. That was October 2009. Only by taking out that last high would probably turn this downtrend into an eventual uptrend thereafter. And of course, after that, should that happen, we would be testing again probably the all-time highs at 160. But that would be stretching things too much at this point. First challenge, see what happens when we get to this trend line. Okay, this is going to be all for today. I appreciate you joining me once again. To those of you who have not yet added me as your Facebook buddy, I strongly suggest you do so you will have access to all of my posts. You can achieve that by adding my email address, alexberkowitz@gmail.com. And as always, should you have any questions regarding technical analysis, don't hesitate, just drop a line at alexberkowitz@gmail.com and I will gladly get back to you with a reply to your comment. Thanks again for joining me. See you next video.